Good morning, HEXO traders and investors. It's Rod with Power Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. It's Thursday, December 15th. Hope you're having a great day so far. We got less than awesome earnings from HEXO today. We did miss on the earnings forecast for Q1 2023. Going to do a quick video. I might do a deep dive a little bit later on today. I do have a busy day, but I wanted to come on and just give everybody my 2 cents and give you a quick update and let you know that we did miss on earnings per share and revenue forecasts. But we'll go through the highlights here real quickly. So everything mentioned will be in Canadian dollars unless otherwise stated. So the strategic realignment demonstrates significant results across the business, including quarter-over-quarter improvements to adjusted EBITDA and increased gross margin before adjustments. HEXO has signed new cultivation agreements and purged unprofitable sales. Redecan brand achieved record sales, prompting 300% increase in production, which is good to see. But moving on, the first quarter of 2023 has been one of the incredible progress for HEXO, said Charlie Bowman, the president and CEO of HEXO. We're now seeing the results of the strategic realignment we executed over the past 2 quarters, and we have successfully reset the company for long-term success. Our laser focus on tackling the balance sheet, pulling back on those unprofitable products where our strength in premium cultivation were not being leveraged, and expanding further into opportunities where we know we can win is paying off across the business. Over the past 6 months, we've made favorable adjustments to our debt structure, and they paid off. In early December, more than 40 million of legacy debt. We've reduced our general and administrative selling, so SG&A, marketing and promotion expenses by 18 million, and have substantially lowered our overhead costs, said Julius, the CFO of HEXO. We've increased our gross profit before fair value adjustments by approximately 41 million over the previous quarter and have significantly decreased our inventory levels. We've also eliminated unprofitable sales, redeploying those resources into profitable business segments. These actions have paved the way for profitable growth, and we're now building positions in strength in those areas where HEXO excels, continued Bowman. We've redesigned and upgraded our Masson Grow facility, have signed new cultivation agreements, including the partnerships with Entourage and Tilray, and have announced the launch of top shelf premium brand T 2.0, so that the Tyson rebranded into the Canadian marketplace. Our Redecan brand achieved record sales in the quarter, and we've increased our output of Reddy's pre-rolls by more than 300%. So they did say that they were behind by quite a large margin, and they said that they were looking to increase by 2 to 3x. So there you go. They're increasing output for pre-rolls by 300%, so they did meet what they said they were looking to do, with no capital investment, enabling us to expand our portfolio to meet consumer demand across Canada for these products. So they did miss on EPS and revenue. So revenue came in at 35.77 million, and we were forecasted at 43.57 million. So big miss there. And EPS, I just go over to the document here. I'm going to check out the management discussion and analysis. I'll go in a deep dive into that a little bit later on today. Like I said, I'll probably do another video. We're definitely going to be talking about it in the private Power Group community, but I'll probably get do a little bit more of a deep dive and then get another video out later on today. We can see here that net loss and comprehensive loss per share. So EPS came in at negative 0.09, and that was forecasted at negative 0.02, but it did come in half of what it was in the prior quarter at negative 0.185. So slash that in half, but still a big miss on EPS and revenue. Something I wanted to mention as well is the decline in revenue was part attributable to the timing of revenue recognition, as certain shipments failed to reach their destination due to severe weather towards the period end. Other challenges were faced, leading to shortages of desired products and short filling purchase orders as the company continues to implement its revised demand planning process. So definitely not waiting for great earnings today. I was speculating that maybe they were going to have good earnings today because of the fact that we had the reverse split news yesterday. If you haven't seen that, I just did a video. I would encourage you to go check that out. But essentially, they did the announcement yesterday after market close, and I was speculating that maybe they were going to have good earnings because that might soften the blow from that news coming up. And unfortunately, we missed on both EPS and revenue. So pretty much the worst case scenario. We'll see what happens to the price. I do have a buy order in at 15 cents USD, and it's more than likely going to hit today. If you are thinking about what's going to happen after the reverse split, however many shares you have, just divide that by 14, right? Because it's a 1-for-14 reverse split. So your shares that you currently own, you just divide that by 14, and that will be the shares that you have left over. Or you multiply the price by 14, right? So the price goes up, but your shares go down in a reverse split. In a normal stock split, your shares go up and the price goes down, right? So in this instance, whatever price you have, just multiply that by 14, and however many shares you have, just divide it by 14. But if you're like me and you have a buy order, that buy order will hit as long as we do not see the reverse split take effect. So on the 19th, on Monday, thereabouts, they said that's when it should kick in. If you have a buy order set, then you'll have to cancel that and redo it, right? So it's not going to adjust that for you, but your average cost, that's going to increase by 14 as well. So anything to do with price, aside from those orders that you have set, right? Those predetermined set orders, buy orders, those are going to have to be canceled and redone if they don't hit before the reverse split takes effect. So just be aware of that. But we are seeing some positive, we're still seeing some increased, with the earnings per share. We're seeing the net loss. We're seeing SG&A. We're seeing improvements on all those fronts. Very odd. I was surprised with the revenue, but they said it was the decline was attributable to these shipments failed to reach their destination due to weather and other concerns as well. So they definitely have some challenges ahead. It does look like cash. If we take a look, let's go down to the cash section here real quick. I want to try to keep this video as short as possible. But if we go down to the period here, so cash and cash equivalents beginning of the period was 83.238 million, and cash at the end of the period was 78.484 million. So Yahoo Finance does have 83 million there updated, and that was from the previous quarter, but you can see here at the beginning of the period it was 83 million, now down to 78 million. So if anybody's wondering what their cash position is like, that's an update on that. But again, we'll go through a deep dive on this maybe a little bit later on today, but I do want to keep this video a little bit shorter just in case people were wondering in terms of estimates, and I wanted to get the video out before the market opened today. So don't be surprised if we were sitting at about 14 cents USD pre-market, so don't be surprised if this thing drops to 12, maybe even 10 cents. Personally, I'm going to be adding my buy order at 15 cents USD, and I'll add again at 10 cents USD. Everybody needs to make their own decision. I am still a long-term believer in HEXO. I don't think HEXO is going anywhere, to be honest with you, like 100%. Genuinely believe that HEXO isn't going anywhere. HEXO's, in my opinion, is too big to fail. They'll either get absorbed by Tilray. We know that they just signed new cultivation agreements, and they're going to be laser focusing in on their new strategic plan, which is, running a lean machine. And this thing is poised for success, in my opinion. We just need to get around the corner that we're trying to turn here. And like I said, everybody needs to make their own decision. Everybody needs to figure out whether or not, don't listen to me, don't listen to other people. You need to decide whether or not you believe in this company and you're willing to stick with it, right? All MJ is getting destroyed right now. I won't name any names, but the average is down 90% plus from February 2021 highs. HEXO isn't the only one going through its set of turbulences. There's been many other MJ companies that have done reverse splits in the last year as well. And this is just MJ, right? It's still federally illegal in the US. If you diversify, if you don't invest any more than you're willing to lose, if you have a mix of US producers, Canadian producers, some retailers, maybe some ETFs, it's going to help you stay the course. And at the moment, MJ is struggling, right? There's still so many laws and regulations. The drink limits just went up here in Canada, which still haven't taken effect. I was at the store the other day and it still hasn't taken effect. So that will come soon, maybe in the new year. We'll see their systems update at the retail level. And we still have a limit of 30 grams per order. We still have tons of restrictions in the space holding the industry back, right? So it's going to take time. It doesn't happen overnight, and I'm here for the long haul. And at the moment, I don't see any major red flags. We're definitely seeing some concerns, but there's some good things to take from these earnings. But yeah, there's some things left to be desired. But at the end of the day, it does look like they're on the right path. We should see, there's no earnings call, so we should see hopefully an earnings call in 2023, but at least they're still doing interviews with the public. So we can just take it for what it is, and hopefully they start doing calls in 2023. and hopefully we get some sector-wide reversal in the space that can give us some tailwinds and help us, just organically. We know that we don't need to comply with that minimum bid rule anymore. So the reverse split is going to take care of that. We should be trading at around $2.20 post split. So we'll continue to update you, and I'll do a deep dive, like I said, going to go over their MD&A, and let me know in the comments below if you've seen anything that stood out. What was it that I didn't mention that you really liked about the earnings? Is there something that you didn't like? Let me know in the comments below. I would love to hear from you, as always. It's pretty early here in the morning on the West Coast. I was up at 5:45. So again, just gonna do a quick video for those that were curious, and a little bit later on today, I'll do a deep dive into it more than likely. But I do have to go view another property. I might be buying another condo and a second Airbnb property. So again, guys, just don't get too caught up in the short term. HEXO is trying to right the ship, and it looks like things are going in the right direction. We just need to see how we go over the next couple of quarters on our way to positive adjusted EBITDA, and then ultimately cash flow positive over the next 3 or 4 quarters, in my opinion. All right, going to end it there. Thanks again for joining us on the Pursuit of Wealth. It's Rod with Power Group. Have a great day. Smash the like. I would appreciate it. Share the video with anybody that might find value, and we'll see you on the next update. Take care.